The Nightly Business Report.
Good evening. Tonight, as part of the International Monetary Fund program, Sri Lanka wants to reach a foreign reserve target of $7 billion, according to Central Bank Governor Nandalal Weerasinghe. According to the Sri Lanka Tourism Development Authority, the country's tourism industry had a great start to the year, with over 39,000 visitors arriving in the first 5 days of January. The ASPI and S&P SL20 indices both showed declines on the second trading day of the week, indicating that the market was experiencing a downward momentum. And the surge in semiconductor companies and a report indicating that the new Trump administration would take a less harsh tariff posture than anticipated helped the S&P 500 and Nasdaq rise.
From Studio 24, here's Anuradhi Vikramasinghe.
A very good evening and thank you for joining us. Sri Lanka's Central Bank Governor Nandalal Weerasinghe announced that the country aims to reach a foreign reserve target of $7 billion in 2025 as part of its International Monetary Fund program. The country concluded 2024 with foreign reserves standing at $6.1 billion.
Sri Lanka's Central Bank Governor Nandalal Weerasinghe announced that the country surpassed its 2024 reserve target of $5.6 billion under the IMF program, reaching $6.1 billion by the year's end. The receipts increased to $6.5 billion for settlings at $6.1 billion after settling all debts. Looking ahead, the 2025 target has been set to $7 billion, a goal Governor Weerasinghe believes is achievable. Looking ahead, the 2025 target has been set to $7 billion, which is a goal Governor Weerasinghe believes is achievable. The IMF's reserve target, typically expressed in terms of net international reserves, had previously been negative under the former program. The central bank has followed a largely deflationary policy, strengthening foreign reserves while maintaining a stable currency and controlling inflation. However, analysts have raised concerns about a potential build-up of excess liquidity toward the end of the year, which could put pressure on the currency and reserves.
Sri Lanka is taking steps to encourage returning migrant workers to reinvest their foreign earnings into the local economy. The Sri Lanka Bureau of Foreign Employment has launched a 744.75 million rupee entrepreneurship development scheme to support these workers. The scheme will provide financial aid across 311 divisional secretariats, targeting those looking to start or expand businesses. The grants are available to individuals already engaged in business ventures or those planning to start new ones. Financial support will be given based on a feasibility evaluation of their business proposals. For investments ranging from 200,000 rupees to 500,000 rupees, 3 grants of 250,000 rupees will be provided per divisional secretariat. Sri Lanka has kicked off the new year with a strong tourism performance, recording over 39,000 tourist arrivals in the first 5 days of January, according to the Sri Lanka Tourism Development Authority.
Sri Lanka recorded a total of 39,415 tourist arrivals from the 1st of January to the 5th of January this year, according to the Sri Lankan Tourism Development Authority. Among these, 6,481 were Russian nationals, while 6,183 were Indian nationals. In addition to these, British, German, Australian and American tourists were also among the visitors. The highest number of daily arrivals occurred on Wednesday, the 2nd of January, with 9,392 tourists entering the country. This surge in arrivals highlights the growing appeal of Sri Lanka as a travel destination. The strong start to the year reflects a promising outlook for the country's tourism sector in 2025. Experts anticipate continued growth in tourist numbers as the year progresses.
Sri Lanka's national tea sales average has risen to 1,225 rupees and 17 cents per kilogram, reflecting an annual increase of 53 rupees and 88 cents from 1,171 rupees and 29 cents in 2023, according to data from the Sri Lanka Tea Board.
Sri Lanka's national tea sales average for 2024 rose to 1,225 rupees and 17 cents per kilogram, reflecting 53 rupees and 88 cents increase from 2023, driven by gains across all major tea growing elevations. High-grown teas saw the largest increase, averaging 1,141 rupees and 63 cents, up from 69 rupees and 15 cents from the previous year. Medium-grown teas increased to 1,064 rupees and 48 cents, marking a rise of 52 rupees and 13 cents, while low-grown teas, which dominate exports climbed 1,304 rupees and 48 cents, which is up from 52 rupees and 23 cents. In December last year, the national sale average stood at 1,184 rupees and 82 cents per kilogram, showing a 47 rupees and 6 cents rise from November. Although December saw a slight year-on-year decline in rupee terms, the dollar value increased by 43 cents due to currencies. Although December saw a slight year-on-year decline in rupee terms, the dollar saw a value of 43 cents due to currency fluctuations. Forbes and Lanka Tea brokers reported positive variances in both rupee and dollar terms across the regions for the full year. This indicates a strong performance in Sri Lanka's tea industry despite global challenges.
Sri Lanka's central bank governor Nandalal Veerasinghe stated that the country could maintain its reserves and continue debt repayment even if vehicle imports rise to $1.5 billion annually. In 2024, the central bank projected that relaxing commercial vehicle imports could require around $500 million in foreign exchange, while private vehicle imports might need an additional $1 billion. Despite these increased costs, Governor Veerasinghe emphasized that Sri Lanka could manage its reserves and make necessary payments following debt restructuring. He acknowledged a potential small deficit in the current account, but noted that it would be manageable. In the past, Sri Lanka's current account deficit had been much higher. The country's private banks have repaid debt, while the central bank and government also met obligations to multilaterals, securing resumed budget support loans for further debt repayment. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The market experienced downward momentum on the second trading day of the week, with both the ASPI and S&P SL20 indices showing a decline. This marked a shift following a prolonged period of upward movement. And for this, we speak with Anjali Matthews from First Capital Holdings.
Today, the Colombo Stock Exchange closed in red for the third consecutive day at 15,855, losing 24 points and marking a 0.15% decrease from the previous day. And similarly, the S&P SL20 index also experienced a decline and closed in red at 4,802, losing 3 points and marking a 0.06% decrease from the previous day. The key contributors towards the market's negative performance include HNB, Central Finance Company, Hemas Holdings, Lion Brewery Ceylon plc, and LOLC Finance. So amidst the negative sentiment, retail and high net worth investor participation was lower, while the banking sector and diversified financial sectors did record some gains. The market turnover experienced a decline, closing at Rs 4.6 billion, which marks a 35% decrease from the monthly average. The banking sector dominated the overall turnover, accounting for 22% of overall turnover, which was followed by the diversified financial sector and the food, beverage, and tobacco sector, with each sector contributing to 19% of turnover, respectively. The top gainers of the day were Diesel and Motor Engineering plc, Asia Asset Finance plc, Satosa Motors plc, Singer Hospitals plc, and Sen Kargala Finance. While the top losers of the day were Ceylon Printers plc, Pan Asian Power plc, Samsung International, John Keells plc, and Resus Energy plc.
Both overnight and total outstanding liquidity have continued to trend upwards, remaining comfortably above the 150 billion rupee mark. For further insights, we speak with Dimantha Matthews from First Capital Holdings.
Sri Lanka has recorded foreign reserves of around $6.46 billion for the month of November 2024, compared to a slightly higher number, $6.47 billion in the month of October. So we are seeing a marginal drop of around $10 million. However, if you look at the month of November, we've seen again another significant amount of purchase of dollars by the central bank, amounting to around $327 million. So this has withheld the currency from appreciating, and so this can be considered as a significant amount of purchase compared to the month of October of around $113 million. However, it's interesting to note that this amount of dollar purchases has not converted to higher foreign reserves, so we believe that it could have been used up to pay some of the dollar debt that would have been there. Looking forward for the month of December, also we are seeing a strong level of purchases of dollars by the central bank. So in the month of December, $231 million has been purchased, while the sales have been only $22 million. So on a net basis, we are seeing another net purchase of over $200 million. So something important to note in the month of December is that there is a possibility that we may have a dollar outflow, which is there was the external debt restructuring agreements that was reached with the international sovereign bondholders, and with it it was supposed to be a 225 million convenience fee or consent fee that need to be paid out. So we're not sure whether it was paid out in December or it will be paid out subsequently. However, that may impact some amount of reserves in the month of December. So overall, we are finishing the year on a very strong note, and so just under 6.5 billion in the month of November, and maybe slightly around under that or around there for the month of December as well.
Gold prices remained relatively stable in Asian trade today as investors speculated on potential trade tariffs under U.S. President-elect Donald Trump. Spot gold rose by 0.1%, reaching $2,638.05 an ounce, while February gold futures also gained 0.1%, reaching $2,649.19 an ounce. Despite this uncertainty, a recent drop in the dollar provided some relief for the yellow metal. Throughout December, bullion prices had been under pressure, with some profit-taking and anticipation of a slower pace of interest rate cuts by the Federal Reserve in 2025. A strong dollar had weighed on gold, pushing the greenback to over 2-year highs. However, the dollar slid from these peaks yesterday, offering a slight boost to gold. Oil prices eased today, extending losses into a second consecutive session following last week's rally. Brent futures edged down by 0.1% to $76.22 a barrel, while WTI crude fell 0.19% to $73.42. Despite concerns over tighter Russian and Iranian supply amid expanding Western sanctions, which helped curb further losses, both Brent and US West Texas Intermediate crude saw declines. Both benchmarks slipped yesterday after a 5-day rise last week, during which prices hit their highest level since October, driven by expectations of additional fiscal stimulus to revive China's struggling economy. The growing supply from non-OPEC countries, coupled with weak demand from China, is also weighing on oil prices, with expectations that the market will remain well supplied throughout the year. The Sri Lankan Rupee has depreciated further against the US dollar today, showing a decline compared to yesterday. According to the Central Bank of Sri Lanka, both the buying and selling rates for the US dollar have increased. Let's now take a look at how the Sri Lankan Rupee is performing against other major global currencies. break now. This is the Nightly Business Report. Welcome back. The Board of Investment has signed a $1.06 million agreement with Fusion Apparel, a joint venture of Brandix, to set up a cutting-edge manufacturing facility dedicated to blue bonding garments.
The Board of Investment has signed a $1.06 million agreement with Fusion Apparel, a joint venture of Brandix, to establish a state-of-the-art manufacturing facility for glue bonding garments. The facility will focus on producing export-oriented garments and providing glue bonding services to other BOI-registered companies. The technology, which uses adhesive to join fabric layers instead of stitching, is widely used for creating seamless clothing such as lightweight activewear, waterproof jackets, soft lingerie, and durable outdoor gear.
The National Savings Bank, fully owned by the government of Sri Lanka, continues to benefit from the government's explicit guarantee on its deposits and interest, as mandated by the National Savings Bank Act. With a strong foothold in the country's household sector, NSB holds the largest market share among licensed specialized banks in terms of assets and deposits, amounting to 1.7 trillion rupees and 1.5 trillion rupees respectively. Despite a restricted ability to extend loans, the bank's focus on government securities reduces credit risk and enhances liquidity. NSB's liquidity profile improves significantly, with its liquidity coverage ratio rising to 343.78%. The bank's net interest income surged by 191%, reaching 53.4 billion rupees, while its core spread improved to 6.7%, in line with decreasing interest rates. Profit before tax showed significant growth, driven by lower interest expenses, reduced impairment charges, and higher fee income. Hata National Bank has appointed Bimal Pereira as Deputy General Manager and Chief Growth Officer and Chandimukure as Deputy General Manager and Chief Innovation Officer. These strategic leadership appointments reflect HNB's focus on driving growth and fostering innovation in a rapidly evolving business landscape. Bimal Pereira brings over 2 decades of expertise in corporate strategy, investment finance, risk management, and digital financial services. He has a proven track record in identifying business opportunities and creating long-term value, having held key roles at NDB Bank PLC, LB Finance PLC, Alliance Insurance Lanka Limited, and Acuity Knowledge Partners. Chandimukure, with over 25 years of experience, is recognized for leveraging technology to address complex business challenges. His innovative and entrepreneurial approach has consistently delivered impactful solutions across various industries. In a night of celebration and achievement, Shangri-La Colombo and Shangri-La Hambantota emerged as prominent winners at the Sri Lanka Tourism Awards 2024.
Shangri-La Colombo and Shangri-La Hambantota shone brightly at the Sri Lanka Tourism Awards 2024, earning multiple prestigious accolades. Shangri-La Colombo won the Best Themed Cuisine Restaurant Award for its renowned Shang Palace, known for authentic Chinese cuisine. The hotel was also recognized as the Best Convention Hotel for its outstanding MICE facilities, solidifying its position as a leading venue for business events. At Shangri-La Hambantota, the resort was named the Best 5-Star Resort for its scenic location and world-class amenities. The Best Spa and Wellness Center Award went to Chi, the spa at Shangri-La Hambantota, renowned for its exceptional wellness offerings. CSR and Sustainability Manager Chamara Amarasinghe received the Best Conservationist Naturalist Award for his significant contributions to sustainability and conservation efforts. These accolades highlight Sri Lanka's commitment to excellence in hospitality, wellness and environmental responsibility.
EY Sri Lanka has appointed economist Talal Rafi as Director of Business Consulting, bringing a wealth of expertise in economic policy, public finance and ESG operations. Talal has had a distinguished career, including roles as a consultant at the Asian Development Bank and a regular columnist for the International Monetary Fund. As a member of the World Economic Forum's expert network, he has played an influential role in global economic discussions. Talal's academic background includes serving as a visiting lecturer at the Center for Banking Studies Studies, Central Bank of Sri Lanka. He has also contributed to projects led by the World Bank and USAID and served on advisory committees for the Export Development Board of Sri Lanka and Moratuwa University. With his appointment, EY Sri Lanka strengthens its commitment to providing future-ready solutions to clients in a rapidly evolving global landscape. Dialog Enterprise has launched a cutting-edge cloud-based contact center solution for Union Bank of Colombo PLC, marking a major milestone in digital customer service for the banking sector.
Dialog Enterprise has successfully implemented a cloud-based contact center solution for Union Bank of Colombo PLC, replacing the bank's outdated system. The new platform offers a unified communication solution that integrates voice, video, unified messaging, VoIP, and automated call flows. This upgrade is part of Union Bank's broader digital transformation strategy aimed at enhancing customer experience and streamlining operations. With the cloud-based system, the bank aims to improve customer engagement while meeting central bank regulations and compliance standards. The partnership between Dialog Enterprise and Union Bank highlights their shared commitment to innovation in the financial sector. The solution will redefine customer interaction, making the Union Bank a leader in digital banking transformation. This move underscores the bank's dedication to leveraging technology for sustainable growth and improved customer service.
Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian stocks rose today with regional technology shares tracking overnight gains on Wall Street. Although Chinese markets lagged after the US added two major tech companies to a blacklist. Tech-heavy indexes performed well, with Japan's Nikkei 225 surging 2.4% and South Korea's Kospi gaining 0.9%. Japan's Topix index rose 1%, reflecting strong performance in the region. Meanwhile, China's Shanghai Shenzhen CSI 300 and Shanghai Composite indexes remained range-bound, and Hong Kong's Hang Seng index dropped 0.5%. The decline in the Hang Seng was primarily driven by losses in internet giant Tencent Holdings Limited and Tesla battery supplier Contemporary Amperex Technology Limited, both of which fell over 5%. The S&P 500 and Nasdaq rose, boosted by a rally in semiconductor stocks and a report that suggested the incoming Trump administration could adopt a less aggressive tariff stance than expected.
U.S. stocks closed mostly higher on Monday, thanks to a rally in chip stocks, but the Dow ended marginally lower. The S&P 500 gained more than 0.5%, and the Nasdaq rose about 1.25%. Chip makers got a boost from Microsoft's plan to invest $80 billion to develop artificial intelligence-enabled data centers. Shares of the tech giant rose 1%. Foxconn's forecast-beating fourth-quarter revenue also helped lift the sector. Stocks have had a mostly bumpy couple of weeks, but should continue to rise largely on the back of tech stocks. Nvidia and Advanced Micro Devices both gained more than 3%, while Micron Technology jumped roughly 10.5%. Among other movers, shares of Ford and General Motors rose after a newspaper report said President-elect Donald Trump's incoming administration would impose tariffs only on certain sectors deemed critical to national or economic security. Trump later refuted the report. And shares of Citigroup gained about 2.5% after receiving a bullish rating from Barclays. That followed positive comments from Wells Fargo last week.
In the shopping malls of Santiago de Chile and the beaches of Brazil, Argentines are snapping up clothes, electronics and chaipaneras, taking advantage of cheap prices in other countries as domestic costs in dollar terms spike on a stronger local peso.
Argentines were all smiles at this Nike store in Santiago, Chile, where some have flocked to buy shoes and other items for much cheaper than at home. Melanie Galarza is one of them. The Argentine peso has remained strong, and triple-digit inflation has pushed up the relative cost of goods in the country. The dramatic shift has come since Libertarian President Javier Milei took office in late 2023. ushering in tough austerity measures that have helped bolster the currency, which had been a laggard over the last decade that made Argentina cheap. Now, Lionel Messi appears to be encouraging travelers at the Buenos Aires airport to go abroad for bargains, while celebrating Argentina's World Cup win in front of Brazil's famous Maracana Stadium in Rio. Argentina's official peso weakened around 22% last year, while inflation was estimated at around 118%. That made restaurants, shops, and fuel all feel much more expensive in dollar terms than they were just a couple of years ago. But Milei's government argues that domestic prices will eventually come down with more open competition. He strongly favors free markets, even if that comes with a short-term cost. Milei's policies have remained broadly popular, with the populace tired of years of economic dysfunction.
Well, that's all from us here at the Nightly Business Report for today. We'll see you again tomorrow with the latest updates across the business globe. Until then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a great night.